You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. It's time to rock out with the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old Options Insider Radio Network, coming to you from scenic and sunny Chicago, our studios here in downtown and apparently snowy Chicago. Got a last-minute April snowstorm. Who'd have thunk it here a couple weeks into April? Got to wake up and see snow on the old streets of Chicago. But there we are. It's been a pretty mild winter, all things considered. So I guess one last final dusting. The boats are still going. The tour boats are going up and down the river even as the snow has fallen. So it is kind of an interesting scene out there. But otherwise, it's been pretty nice. Can't complain here. Speaking of not complaining, I hope you don't complain about our programs. If you like what you hear, head on over to your platform of choice. Could be iTunes, Stitcher, whatever the heck you listen to us on. Donkey Carts over there in wherever your show program download station or spot of choices. And go ahead, feel free to leave us a review. iTunes, Stitcher, TuneIn, wherever you get it. Can't wait to leave a review on our website. You can always post stuff on social media. We look at those as well. It's all that fun stuff keeps the ball rolling. Share it with your friends. Let them know, hey, there's a fun option show out there you may want to check out. It's been around for, I don't know, a decade or so. So they're a little late to the party, but better late than never. And however you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom, all that fun stuff. And if you really are motivated, you want to join us, see how the sausage is made live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via the magic that is Mixler. Let's see who's joining us on the magical cavalcade of options all-stars that is the option block today. Let's start off. Let's spin the wheel and see who we got. Let's start off. We're landing, listeners, in a little sleepy town just outside of Chicago, where they're probably nestled in a bed of snow right now as we speak. And we've disturbed him from his slumber and his dreams of sugar plums dancing in his head just to join us today on the old option block. He is Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, we're sorry to disturb you from your snow day and all the fun that's being had out there in St. Charles.
Always a joy to hear the poetic nature of these introductions today with sugar plums and Options All-Stars and everything that you got going on today. I'm excited, man.
What can I say? I'm feeling it today. I'm feeling it in the old Holstein chair today. Let's see what I got in store for our other associate as we spin that dial yet again, and we land on the sleepy shores of Maine, where sometimes you see people out there looking for crabs, looking for lobsters, doing all that fun stuff, clams. Nay, he is not doing that today. Perhaps, indeed, they are weeping over their lost ice rinks. No, not getting any of that today. He's rare, he's primed, he's ready to roll, to talk some options. He is none other than the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir.
It is good to be back. It is good to be back in the Options Insider Radio world. Life is pretty good, I have to say. My actually thoughts are switching to golf and fishing from ice rinks and cross-country skiing. So things are moving. Things are changing.
Things are proceeding. The seasons are progressing. So you've dried your tears over the lost ice rink, sir?
I have. What's funny is it was, if I didn't have the height and balance of the rink, we probably could have been skating still until last weekend because there's still some frozen. It was a little ugly, but I think the ice would have held up for much longer than I thought possible.
Yeah, you guys continued. Mother Nature helped you guys out there. We got a little dusting. You guys got, a month of consecutive bomb cyclones and nor'easters every other week, or every week, really. So you guys got it a lot worse than us. This is just a little gentle dusting to remind us, winter is still kind of lurking. But in reality, you guys got it much worse. We know who's going to get it great is you guys right now, because it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we're rocking, rolling, having all sorts of fun with the show proper, Mr. Rock Lobster, reminding me that we never sent out the show notes. So they're flying blind here today. They have no idea what we're talking about, listeners, so they're going to be terrified. Maybe I'll put one in here to the producers, see if they can share those notes while we're going on with the show. And what a show it was today in the old markets, listeners. Most of the major indices seeing a lot of green on the screen earlier in the session, and then as the kind of the session progressed, we saw some of that green start to retreat a little. Still ended up firmly in the green. I guess it depends where you look to see how firm it was. We see S&P once again playing the old Goldilocks of the bunch, up right around a little bit less, about 0.675 of a point, some percentage point, somewhere in that range. The Dow is the laggard, only up a mere like 0.3 of a percentage point by the end of the day. And we got tech-heavy NASDAQ leading the charge. It was up over 1%, getting up less than that now, but still firmly ahead of the other two. Still interesting to see all the major indices pretty much giving up their leading gains on the day. The S&P getting up to 2653 actually intraday before settling out right around 2620 level. Or so, got as low as 2614 intraday. So had a decent range out there, nearly a 40 handle range intraday. So a lot of movement going on out there. And of course, there was a lot of red on the old VIX cash screen. But as we're coming into the end of the day, actually flirting with the unch to slightly up on the day here. Yeah, actually ticking up there with about 21.5 or so in that range. So all that nice juicy erosion that was going to go on out there in VIX cash, you got to wait another day for it, as there's too many other shoes lurking and waiting to drop out there in the old markets. But the nice thing is that you're one of those folks who's like, I'm tired of all the macro craziness and the Syria whatnot, the Trump this and the trade war that. I want to focus on earnings. Well, you don't have to wait too long till we can do all that for you again. I believe Netflix is coming up in about a week, actually, on the 16th. So if you're saying, didn't we just do that? Yeah, we did. But, let's just do it all again because it's fun and it's something you can sink your teeth into if you're tired of all the other madness out there. Speaking of madness, let's go out to the shores of Maine and see what madness was catching the eye of the Rock Lobster today, sir, in this topsy-turvy market out there. Mostly topsy, but seemed to get a little bit turvy towards the end.
Yeah, I think the market. I think the market wants to rally back a little bit, but every time something else happens. So now, I think, and I was kind of waiting anyway, but I think the market got spanked because the FBI is now investigating the Stormy Daniels stuff. So Mueller is now, the special counsel is now on to Stormy Daniels. So we're taking a play out of the 90s with Clinton. They had Whitewater and this and that, and they end up getting him nothing to do with anything else but some random woman that,
because that's worth 0.5% in the S&P, right? Stormy Daniels, that's worth 0.5% in the S&P.
I think it was the Stormy Daniels, and she spanked the market. Who knew she had market power?
There you go. See, I knew you had it in you. A little bit of some punnage on the show today.
But anyway, we'll see how all that plays out, and and then they have the CBO as usual. I think they came in with their. With their estimate of a $1 trillion deficit, so we'll see by 2020. So we'll see how accurate that is, because we know they hit it right on the mark during the Obama administration. They hit it right on the mark during George Bush, and they hit it on the mark for Bill Clinton. So they're really good at missing their forecasts. So we'll see. We will see where all that comes out. But I think we're waiting for some technology earnings. And I looked at this. The VIX, probably another buying opportunity for. It seems like every time the vol gets close to 20 or drops below 20 lately, you want to buy it or come up with a way to buy it because it just is not staying there. So, and I think today we have another case of that. Shocking
things abound. Just like Uncle Mike, whatever he's looking at these days is always shocking. He's into that crazy hardcore stuff like macro and fixed income and such shocking, crazy, esoteric stuff. No crypto for him. Mr. Uncle Mike, what was catching your eye in today's activity, sir?
Yeah, no crypto for me. That's right. Although I really would like to try and get the CVOE or whoever to hurry up and get some options out on Bitcoin because I'd really love to buy some puts on it in some way, shape, or form. I don't think it's too late, but that's on a total side note. Today we had a really nice recovery from the downturn on Friday. Peaked out right around 1 o'clock Chicago time today. And just the last 2 hours, there has been just a bona fide sell-off, to say the least. We're still up on the day. But with that being said, we have, I think earnings are going to be the big story coming up. We have some coming out later this week, which I'm sure we can talk about around the block. But overall, we did not have a lot of high volume today. So I would I'm kind of expecting this market, although these days I really have no expectations, but I would not be surprised to see the market kind of remain painfully sideways, depending on how do I put this? Maybe excitingly sideways until we actually have earnings coming out. Because we did not have a lot of high volume today, and we're in a very violent range, but it is still a range. And with the range, the way with which it is, I think we could get some excitement one way or another. As if we've not had enough already, once we have earnings coming out. Because if we can break out of the range with which we're in, either for better or for worse, with earnings, then we're going to have a lot to talk about on the coming shows.
Yeah, I'm looking forward to a little bit of earnings because, that just brings us back to, I hate to say rational because earnings can certainly be irrational, but something, clear, something you can measure, something you can sink your teeth into rather than the esoteric effect of Stormy Daniels spanking the market or the latest Trump tweet or Syria or some of these other immeasurable impacts. Hashtag trade wars, all the other stuff going on. Speaking of things going on, neither of you hit on the big recent event that is clearly moving the markets, was clearly the reason that markets were in rally-ho mode, at least until Stormy Daniels took them off their rally-ho mode today, which is, of course, the majesty of the show of shows, that is WrestleMania. Uncle Mike, did you watch the pageantry of all things WrestleMania, sir?
No, I did not. I can't really get into it anymore. I mean, I'm more of a wrestling historian as opposed to living in the present with it. I just still can't quite get into it like I used to. I had a very diehard the 80s. The 80s WWF wrestling, loved it, know all about it, can name as many wrestlers as just about anyone. I had a brief stint watching it again in the late 90s, back when the WCW and the WWF were having their big feud, and the WCW had the NWO, and Hulk Hogan was a bad guy for a while. But at this stage in the game, it doesn't excite me like it once did, I have to admit.
Well, you just need the cure for that, because I missed all that stuff. I like the 80s stuff. I missed all the WCW. I kind of was out for all that era. You just need that little guy who gets into it, and then he invites all of his buddies over to your house the day of WrestleMania, and then you kind of have to be into it, because otherwise it's just madness. So, yeah, that was kind of fun. But bringing it back to the show here as well, not a stock we get to talk about a lot here on the show, but certainly moving a bit. Post-WrestleMania is, of course, World Wrestling Entertainment Inc. Ticker symbol WWE. Bet you live you didn't even know it was publicly traded. Yes, it is. It's actually on quite the tear. Closing today, 37, off about 1.2%. So a case of buy the rumor, sell the, I hate to call it fact, but whatever actually happened at WrestleMania, because it's still a lot of made up silliness there, but all sorts of fun. But yeah, this name stock's been on a tear. It's on a multi-year high. Let's say closing today, 37.07, which is near its recent high of 38. Actually, did it hit 39? It flirted with it. Yeah, 39.09 it hit recently, just back in March. This name's been on a tear. It's like it shot up earlier back, actually, the 25th of October last year, right on earnings. It went from about 21 and then just shot up to about 25, 26 post-earnings, and it kind of has been never looked back ever since then. And yes, it is optionable as well if you're listening or wondering, listeners out there. It actually does some decent volume, doing about 2x its ADV post WrestleMania. Surprise, surprise, people like it. His name does a whopping 500 contracts a day. Today, doing 1,019. So just tearing it up today. About 2.5 to 1 calls over puts. People clearly loving themselves. Some coming in buying some calls post WrestleMania, which is always funny. The 38s in April, lighting it up today, about 100 contract. That was the. And actually, I'm sorry, the 36s in May were 114 contracts. That's where the lion's share of the action was. Not a lot of OI to speak of. Actually, there's about 12,000 contracts open, so it's not too bad. Mr. Rock Lobster, is this a hot issue, a hot item in the pitch chat? A lot of people coming in looking to sling some puts on WWE.
Trying to wrestle some calls out of the market. Boy, I've got a lock on all the lame puns today. This used to actually be kind of an interesting stock, and then. Do you actually really let your kids watch WrestleMania?
We had a house full of kids. It was hilarious. It's I don't know if you know, but it's written for 8-year-old boys pretty much, that show. It's like the perfect age group for it. You get too much beyond that, you see the seams, you see the cracks. But that 8 to 10 age group, it's right in the sweet spot. It's fantastic for them.
That's the sweet spot, I guess. So surprisingly, WWE did not come up today. We actually we mostly looked at just like boring stuff at the SPX, because at one point it was up almost 1 3/4% today. So that kind of movement got everybody excited.
SPX is boring. Who wants to sling SPX when you could sling WWE and that sort of madness? Speaking of madness, the names a lot of people were slinging today. People have been waiting for a while out here to get their hands on, sink their teeth into some options on good old Spotify. Well, you had your chance today. The IPO happened recently, and now we finally have the options going live this morning. Ticker symbol SPOT, SPOT. Closing today 150 even, pretty much. Right around back to that IPO level. Let's see how high did it get. And I got up to 169 back on the IPO on the 3rd, and then it kind of traded as low as 135. So it's had quite the range, 35-point range or close to it. Excuse me. Kind of flitting around right around 150 today. Doing some action today. Doing about 4,400 contracts out there. About almost 1.5 to 1 calls over puts. No ADV to speak of, because today's the first day. So the ADV 44.52. There you go. We'll see if that holds up. If it follows the trajectory of some other names like Dropbox, they did a lot out of the gate, and then they kind of slowly have trailed off since then. Like, you remember Dropbox launched a few weeks back with about 10,000 contracts on that first day. That one's ticker symbol DBX, listeners, and it hasn't really lived up to it ever since. The ADV right now is 45.86, but I think a lot of that is still looking in the rearview mirror, that 10,000 contract day, because pretty much no day since then has come close. Today, doing about 2,700 contracts out there. Yeah, about almost nearly 4,000 yesterday. 4,700 is a big day back on the 3rd. That's the other big day outside. Actually, they did one day. I'm just going to take it back. On the 29th, they did one day with 9,700 contracts. And actually, that was the IPO. Other than that, I thought they did 10,000 that day, but they did 9,700 that day even. So yeah, it's been an interesting one to watch. In fact, our question of the week, we'll get to it a little bit, listeners. You guys can go play along now live over there at Options on Twitter if you are so inclined. Is asking you guys which of these kind of super hot IPO names that everyone's really dying to sink their teeth into from an options perspective. Everyone's hitting us up. When they're going to list? When can I trade options on them? The exchanges have gotten that down to a science now. It used to be weeks or months before they got the options on them. Now it's within a week of the IPO. Bam, you're slinging options. And then it kind of seems to fall off So yeah, it's kind of a challenge. But so we asked you guys this week, what do you guys think about? Which one of these names do you think you're going to be trading still on options, at least in about a year? We'll get to your thoughts in a minute. Mr. Rock Lobster, your crazies out there, are they slinging any of these hot IPOs, the spots, the Dropboxes, and all that fun stuff?
You would think some of our people would be more interested in that stuff, but really they have kind of their vanilla areas they look at. Nobody's venturing into the IPO space yet. Maybe, but nothing. I wish I had more to add to that. I would love to add a little color, but everything was so actually interesting on just vanilla market point of view this afternoon or this morning before Stormy came in and blew the market away.
You just blow the puns. I'm going to mute you before you give us an explicit tag here on the old network. But I'm giving you all these chances here to look into the quote unquote sexy names. The high flying IPOs, the crazy wrestling entertainments of the world, and you're just slinging the boring S. I thought for sure the crazies in the pit chat at the very least would be sinking their teeth into these ones. Uncle Mike, are these going to make it into the strategic night anytime soon, you think? These, your Dropboxes, your Spotifys, are these on the radar of your clients? Well, sometimes your clients are on the bleeding edge, even if they have to force you to be there sometimes and calling you up and dragging you, kicking and screaming, saying, hey, let's look at this crazy IPO name. You getting any of those calls or not so much?
No, not so much on these. I mean, I got a lot of calls on some other ones in the past, like Facebook. I had a lot of clients calling me on that one in years past, and a few other ones. But no, I've actually have not. I'm probably not going to. Probably not going to be exploring these. Eagerly awaiting the puts on Bitcoin, I guess.
Yeah, you and us both. We joked. I think it was on. It might have been on Volviews last week that I think we all share the Buffett sentiment. Buffett's like, I'd love to buy a put on Bitcoin because I sure as hell I'm not going to short it, and that's pretty much how I feel. I think a lot of people in the options market feel. Looks like the SIBO has said before they have to wait until their technology migration is complete. I think they announced a date for that to be complete sometime in October. So if you're holding out for the SIBO to kick the ball off with Bitcoin options after they all raced to the door for Bitcoin futures, I'm sure the protracted sell-off in crypto hasn't helped his chances either, but it seems like October would probably be the earliest you could expect something like that. So all people who are guessing at the beginning of the year, Q1, I myself said I thought maybe Q2. I've amended that recently because it didn't seem like anyone was really that excited. In fact, I've asked SIBO, I've asked CME multiple times about when they're going to list some Bitcoin options, and neither of them seem that excited. CME doesn't even have that excuse of a tech migration to lean on. They just don't. They seem like they want to wait, get some settlements under their belt on the futures, and then wait and see. So after everyone was stomping all over each other to get out the gate in December, now all of a sudden there's a lot of wait and see on the option side, which is kind of silly. But luckily, listeners, you don't have to wait and see any longer because it's time for us to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the old Odd Block, the portion of the show we break down the weird, the wild, the wondrous, the head-scratching, the downright bizarre paper that's catching our eye. A lot of people have been having their eyes focused on these crazy Tesla puts since we first started talking about them, and they continue to trade it up. Tesla closing today off 3%, off 10 handles. So if you were one of those ones who were super excited, it was back around the 300 level. Well, I'm sorry. It was there briefly this morning. Got up to, actually today, got up to 309.50. Wow. So that's impressive. 20 handle range in Tesla. Tesla is certainly delivering on the vol front of late. So if you're one of those ones who are excited about that, well, unfortunately, it's retesting again. At least not quite retesting down to the lows of recently around 240 level, but breaking south of 290 to end the session here, 289.66. This is the name that's doing some action, obviously, of late. And the 50 puts out in Jan are where we're focusing our attention. Another almost 1,000 hitting the tape today, 905. These things are back to $1.55. right in that range. So after trading down 30-odd cents when we first started talking about these, getting as high as pushing $3, I think they hit $2.90. Now they're in the sweet spot in between, about $1.55. So there you go, fair value for these crazy puts, Mr. Rock Lobster. Is that your thought as well? Fair value, $1.55 for these completely worthless puts?
You know what? For a while, they didn't look so worthless, though, did they?
No, they did not. That's the scary thing.
I mean, I think Tesla at the bottom, that dropped $100 pretty quick. Now, the pit crazies do look at definitely keep an eye on Tesla for a little bit of action to trade it back and forth, because it is such a range-bound stock. But still, they're definitely moving and shaking those options. So, I guess Musk just has figured out that he probably shouldn't say bankruptcy. That's not a good thing for him to say, because I think it drove the stock down $80.
Yeah, when the stock is pretty much 30 to 40% based purely on the hype coming out of him, when he says those words, it's not a good look. It doesn't work out. It's like when Stormy Daniels pops up on the market's radar. Not a good look either. If those are too out of the money for you, though, Mr. Rock Lobster, it looks like 2,000, almost 2,100 of the Jan 600 puts traded today. So there you go. A little bit of flipping of the script in the money puts for a change of pace. They decided they didn't want to go 200 handles out of the money. They wanted to go hundreds of handles in the money instead. Looks like it might have been a not even a 1x2 funky ratio. It's like 1340 of the Jan 550 puts and 2100 of the Jan 600 puts. Interesting. OI on both of those strikes, by the way. So to do a little bit of digging on those. OI, speaking of which, on those Jan 2019 50s, up to about 48,000 or so now, which is getting pretty lofty out there in that range of those crazy puts. About just a little bit under 48,000. So these things keep growing inexorably. The Jan 2020 puts out there doing about the 50 strike, also doing about 500 contracts today. So a busy day for them too. Almost 11,000 on the tape out there as well. For all of you playing along out there, clearly people love these puts, and they tend to double and then lose half their value and then double again, all in the span of a couple of sessions out there. So it's fascinating. Who cares about Delta? Such banal concepts as Delta, when you've got all sorts of fun playing in these crazy far out of the money puts. Speaking of craziness, let's check back in one final time, see how our friend did on those crazy GameStop calls. You remember last week, Mr. Rock Lobster, at exactly this time, you and I were talking about some crazy person piling into about 18,000 of these GameStop April 12 calls for $1.25. You recall that, sir?
What was this? Was it? I think it was Monday last week, right?
Exactly a week ago, last Monday, yes.
I feel like this was smelling like some sort of takeover action, something. I even think GameStop looks like kind of one of those sort of value trap plays. But and bated breath. What happened? What happened?
Well, this guy looked like he seemed like he actually was on the right tip at the end of the day. He put up 18,000 traded that day. The OI only increased by 12,000, which is kind of interesting. So 6,000 getting in the back and forth, perhaps scalping treatment, getting lost in the shuffle a little bit there. So he ended up establishing about 12,000 for the rest of the week. And we talked about him on Thursday's show. Looked like they had looked pretty good. The OI was getting down to about 10,000 at that point. He had taken off about 2,000 or 3,000 at decent prices. Let's see, he got some off around $1.50. So he was doing all right, making about 25 cents on a lot of those. Remember, he did a lot of them around, I think the worst kind was $1.25. He actually got some cheaper, like $1.03 and stuff. But he got the lion's share, I think, around $1.25. So we'll price him off that for convenience's sake. And going into Friday, the OI was nearly 7,900, 78.79. Saw about 7,000 going up. So he pretty much took all of them off on Friday. They traded at a bunch of prices on Friday from $1.29 all the way up to $1.55. So this guy ended up doing all right on this trade that seemed kind of outlandish at first. Let's say he made somewhere between a dime to probably 25 cents conservatively. So you're talking on, let's just say, the open interest, just on the 12,000. We don't know how much what he scalped on that first day or what he ended up scratching. Let's say somewhere on $1.20 to like around 300,000 maybe for the whole thing. Maybe a little bit more, a little bit less. Obviously, there's a lot of averaging going on in there. So at the end of the day, Mr. Rockloff, so that pays for a week of your time.
I think that definitely would pay for a week of my time. But I think it still feels like they took what they could get, but it wasn't the home run they were looking for. You know, you don't buy 15,000 contracts or, you know, to make a nickel. You know, I mean, they made more than that. They made a dime to 20 cents. But
yeah, I don't think that was the home run they were looking for.
Yeah, plus, you know, think about getting out. You're like, oh, my gosh, this is my shot. I get a dime. I get 20 cents. I got to take it. I'm out. What a bummer.
Yeah, the guy was clearly hoping for more because he kept most of the OI open until the very last minute on Friday, you know. So if he thought that was what he was going for, he probably would have closed it out on Thursday when he could have all of them for $1.50, you know. The stock actually dropped a bit. They were looking a little worse. They ended up closing at $1.41, these calls. So he had better chances maybe earlier in the week to close them all out. So clearly he was hoping for something, but he ended up doing all right. So he clearly didn't learn his lesson. In fact, he learned this is a good thing to do, Mr. Rock Lobster. Buy a lot of overpay for a lot of near out of the money weekly premium. What could go wrong with that scenario, right?
And just let's see how it goes. This was still one I thought they would just take the stock. But I guess they didn't have to. So, you know, they're like, well, I'm buying the dollar. I don't want to pay $12 for the stock.
Yeah, why take the stock when you could pick up, you know, nickels and dimes? Do it. Take those nickels and dimes, maybe even a quarter. Who knows? They got on some of them. They certainly did, because they got some really cheap ones early on before people started catching on to what this guy was up to. But still, yeah, interesting stuff out there. We don't see a lot of near-term, very crazy, very near-term out-of-the-money call scoops in such cheap names like that very often. And it ended up working out in this case. I mean, not the home run. You're not retiring off this, but he did all right. Certainly. I mean, when you factor in cost of capital and tying up that much money for a week or so, it certainly did all right. Certainly better than the old money market for a week. All right, let's see what else was cooking out there. This one not perhaps as happy as our last story. Of course, you guys have been seeing all the headlines about what's going on, this escalating back and forth over Syria, and of course Russia involved over there, and Russia's been in the headlines pretty much every day, anyway. So it probably doesn't take a genius to figure out our next name. Is probably going to be something to do with Russia, and it is indeed our old friend RSX. This is the Market Vectors Russia ETF, closing today just a little bit shy of 1997. An excellent year, off about almost 2.5, or a little, almost 11% on the day. This is the name that's doing of late about 6,500 contracts a day. Today doing, spoiler alert, a little bit more than that, 78,835. Almost 4-to-1 puts over calls. That brings us to our attention grabber here. Clearly, puts were the name of the game. We just looked at one, but there were a bunch of these pretty much here across the board that we saw, including a big block here of just puts across the board. People want puts on the 20 strike in RSX. Of course, this is the Market Vectors Russia ETF. We saw someone doing... starting off the day here, looking at a block of nearly 7,000 of the April 20 puts going up for 54 cents, right pretty much on the offer, very close to it. Total of nearly 16,000 going up on the day on that strike, on OI of just 200. So opening paper there. Also looks like about 3,000 of the 19 puts and about 2,500 of the 18 half puts. Also going up. That's not enough for you. See almost 7,000 of the April 20 puts expiring in the weeklies on the 13th also going up. So clearly a lot of people out there. Also a strip looks like of the 19 half, 19 and 18 half puts expiring on the 27th in the weeklies out there. Also doing about 1,800 each of those. So puts were clearly the trade du jour. May 18 half puts, 2,000 of those going up, 7,000 of the May 19 puts. Those are the May weeklies I mentioned before. Yeah, just a ton of put action out here today. And of course, we can look at the chart, but it's not going to tell us what's going on in the future. It'd be quite the magical chart if that was indeed the case. But obviously, everyone very concerned about the latest conflagration and flare-up going on out there with the issues with Syria and how that impacts Russia, who, of course, is heavily involved over in that region, as well as the ongoing escalation of the investigation. Certainly doesn't help as well. But the name RSX, like I said, selling off nearly 11% on that news today. This is the name, though. They're not quite at their one-year lows. They actually hit their one-year lows back in June of last year. They had 1811. So they're not quite at that level yet. They closed today just a little bit shy of 20. So someone here, clearly a lot of people are concerned about us breaking that 20 hand. In fact, they're buying weekly now at the money puts, Mr. Rock Lobster, which is kind of interesting, showing that people are concerned about some near-term downside in RSX. I guess given the headlines, can you really blame them?
I think this is an interesting one because, oil's been on the rally and RSX has been doing okay, but not really that great relative to the rally in oil. I mean, it's been okay, but you thought there would be a little bit more of a bid for it. So, I mean, we could definitely see something with Russia and the U.S., and it's certainly possible. So, RSX used to be hard to believe it was a $12 stock, not, what was it, 2 years ago or something like that, 12 or sub 10, I think. So as a major country index, it's pretty volatile. So I would not be surprised somebody's buying this, but to me, it feels like more of a back spready type trade where, they might buy the puts, but I think they want to have some upside if there is let's just call it one of those surprising bounces.
Yeah, I would not certainly be surprised if they have a lot of the underlying. Maybe they're overloaded up on the underlying. Take a few puts in there, but either way, ton of puts hitting the tape today. 60,000 out there in RSX. So maybe you're one of those ones out there. Maybe you're speccing, maybe you're hedging. Let us know what your thoughts are out there as RSX perhaps poised to retrace some of the downside after having had such a strong rally, but as Brock Lester alluded to, perhaps not quite the rally you were hoping for. Either way, and speaking of not the rally that someone was hoping for, let's finish up here on Yandex NV. I think we hit this one before. It's been quite a while since we've talked about good old Yandex. This is an internet and technology company. They operate a search engine, this says here, but they have a portal. They have the taxi classifieds and a bunch of other things that they do out there. They offer a lot of these in Russia, Ukraine, Belarus, and Kazakhstan. So there you go, our old friend Yandex, ticker symbol YNDX, closing today $34.66, off 12%, or nearly $5 out there. It's not a great day for good old Yandex. Again, that part of the world not making a lot of good headlines right now. Excuse me. This is a name that does about 6,800 contracts a day, almost doing 10x that, doing quite close to 68,000 contracts today. About 8-to-1 calls over puts out there in good old Yandex. And what do we see today? Well, we saw some action in the calls. In particular, it was the May 36s. Let's just scroll on down to straight up May. There we are. It was the May 36 40 call spread going up 5,000 times to start the day. A little bit more than that going up by the time the day was over. By the time the end of the day, there was 18,000 just about on the 40 strike and 22,000 on the 36 strike. Looks like the spread went up with paper selling the 40s, buying the 36s, doing them for $222 and 77 cents, respectively. There, OI pretty sizable on the 40s, about 18,000, and spoiler alert, 18,000 just about traded today. Love when they line up so nicely like that. So it seems like someone was a wee bit optimistic with their upside here in the old Yandex and deciding, yeah, maybe I should roll these bad boys down to a somewhat more reasonable strike, and they went for the 36s instead, doing a little bit more than they had on the 40s. So perhaps they're sitting on some house money from before, not from the original trade, I don't think, but certainly not after today's action. But maybe they're just that bullish. They want to double down, or not quite double down, but a little bit more, 1.2% or so more than what they had before in terms of call size here. But either way, reestablishing on the 36s and doing it for a little bit more size, which is interesting. Let's pull up the 1-year chart here of good old Yandex. This one kind of had a decent year in the rearview mirror. Started off a year ago about 21.5, and I said getting up to closing today 34.66, getting as high as into the 40s. Looks like about 44 or so was the high for this name, 44.5 roughly. So this thing pretty much doubled throughout the year, and then recent headlines have conspired to take some of that off the table, hence our friend here deciding to do the old roll downs. Mr. Rocklop sounds like he's not giving up the ghost. He's just repositioning, shall we say, a tactical retreat.
I'm looking at and I remember some big call buyers in here. I think last year at this time, I thought that was pretty interesting. So, this is one of those ones where it would not surprise me if somebody was rolling it. It has been a favorite of some bulls before in our odd block. So, I'm thinking somebody might be just moving closer to the money.
You know, you're right. I do remember talking about this name. Here we go. It was on April 27th of last year. See how fast I did that, Mr. Rock Lobster? April. So it was around this time. Your memory is not quite Swiss cheese yet. We talked about, it was the April 28th. Looks like they're actually doing a bit of maybe a bit of a calendar. It was the April 28th calls and then the May 23 halves. And looks like a spread. So maybe I think they were rolling from April out to May. The stock back then was 2670, and someone was rolling. Kenyon, the upside call party alive. Actually, no, I think it was the same strike. It was April expiration, the weeklies in the 28th, but they were rolling out a couple of weeks on the 23 half strike. So 23 half in the rearview mirror. Clearly, that one worked out all right. But so you're right. We have had some call love here. And people keeping the call party. Maybe it's our same friend. He's just sized up because it's worked out for him since then. But there you go. See a little bit of history coming back on the old Odd Block. Speaking of things coming back, though, it's time for you guys to come back on the show. It's Monday. It's time for the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You know the drill. You hit us up with questions. We hit you up with answers. Sometimes we flip the script to ask you guys some questions. We took a break from that from the last few weeks because we were doing our big broker madness. But now that the winner has been ensconced in the Hall of Champions and you guys have won your fabulous prizes, we're back to the questions of the week. And this week we're asking you guys, kind of going back to those hot IPOs. Spotify is the latest to hit the old IPO train. Everyone's excited about it, at least for a week or so. With so many recent hot options listings, starting off pretty hot and then kind of cooling off, we have to ask you guys, which of these hot recent IPO names you think you still be slinging options on a year from now? So sometime in 2019. Could be Spot, could be Dropbox, could be Snap, or maybe you guys have some others you want to recommend. This is going to be going all week. We just kind of posted it before the show, so the early votes are in. We still have a ways to go. That said, Mr. Uncle Mike, we'll start with you. Which of these names you think, obviously not you personally, but you think people in general, I should say, will still be slinging options on? Obviously, they'll all still be listed, but kind of actively in next year sometime.
I would say Spotify. I think that's one with the new millennial investors coming in. I think if there's one thing that they would be popular, I think it would be on Spotify in some way, shape, or form. So that is my pick.
It's one of those ones that, a lot of heat on the IPO, and then also everyone, same questions used to hear about Amazon back in the day. Are they going to burn out of cash soon? Are they not paying enough to artists? So there's not as much positive stuff as there is on Spotify. It seems like there's a lot of negative heat on them as well. But we'll see. Mr. Rock Lobster, what's your vote, sir?
I'm going to have to say Spot. I thought that I'm going to agree with Tucson on this one because it's really let's just call it the catchier one. Although Dropbox is kind of popular. Probably everybody has one on their desktop by now or their laptop. But Snap, I just feel like it's sort of dead money. It kind of reminds me of Facebook the first year after their IPO. So it could always bounce back and everything like that. But because Facebook made that massive move to mobile, they literally pivoted the whole company in a year. So I don't see that happening yet for Snap. And I know that Spotify is already popular. So I'd have to say that Spotify probably is the one that has the best shot.
And let's see. So far in the early voting, we got about 5 days left on this one, listeners. It's actually Dropbox in the lead with 44%, which is surprising. And a third for Spotify, 22% for Snap. No others yet, so that makes me think the voting is still early because people come in with all sorts of funky others as things kick off. All right, we got question time here. We got some epics. Let's see if we can fit some of these onto the show today. This one comes from Mark Davis. Put your listening pants on, gentlemen. This is a lengthy one. Let's see. All right. Clear my throat. Get ready for this one. He says, hello. Well, hello, Mark. Good name, by the way. He says, I have written in previously and got some great feedback on my question. So I'm hoping you can help me out again. Well, we're glad we can help you, Mark. Let's see if we can. He goes on to write, I am still playing, he puts in parentheses, paper trading, with options, while in my real account, I purchased shares outright. After having quite a few good years, so he's been doing this for a while, with the increase in volatility lately, I've taken some pretty rough hits. So far, for the year to date, I lost about 16% of my portfolio. I should also mention I currently only deal with index funds, so S&P, International, and small cap. I go in and out of these stocks based on various parameters that may have me holding a certain stock for less than a month to a little more than a month. So his question is here. Is your stock replacement strategy a good use for this, or maybe not, since the time horizon is generally not long? He puts an example. Tomorrow I may buy 100 shares of SPY at 25 each. I guess he's using made-up numbers. Likely selling the shares out in about 20 days. I'm trying to figure out a way to get the same or close to the same movement as if I owned the shares outright, while limiting the downside of at least setting a line in the sand. Having trouble wrapping my head around the right strategy, or if what I want to do is even possible. Let's see, he has a whole bunch of examples. In the example above, my portfolio I had bought outright, and the stock is at 30 in 20 days. I'm at $500. What do I do to get close to this using options? On the flip side, if SPY was at 20, I'm thinking there's a way that I can protect myself from losing some of that 500. Another thing I'm not sure of is, when doing this, should I only be buying enough contracts that I could afford if I were to exercise the options? I.e., if I have $200 in my account, the underlying is $1 share, I don't have to buy $200. Thanks for your feedback. All right. A lot to unpack here in this question. I'm pretty sure the stock replacement he's talking about is one we mentioned before, using a longer term leap to get in there somewhere around, let's say, 60 to 75 delta usually seems to be the sweet spot, but kind of depends on your rules of engagement, how you like to choose there. But somewhere out there, probably beyond 6 months, maybe 6 months to a year, maybe a little bit longer if you want to get super hardcore, but you start getting too far out, you start paying a lot for premium you don't need. So somewhere in that 6 months to a year seems to be the sweet spot, 60 to 75 delta. That's probably what we're talking about. And then he's probably also maybe asking about the other side of that, which we like, which is, of course, writing that near term, maybe even a weekly call against that. This kind of thing, but that usually presupposes a little bit longer holding period than you're talking about. That said, a month, I would say, he said 20 days, or yeah, he says 20, not even a month, 20 days. So a little bit shorter than we're talking about, but still, he's almost a month. He's almost 3 weeks in there, so he could do this a few times with this. Uncle Mike, I know you're more a fan of the wheel than you are outright stock replacements, but I don't know. Are you a fan of doing stock replacement on a 20-day holding period and then kind of using the covered call element, or just doing a stock replacement, or you think it's too short? It's not really worth the effort?
Well, I think in this environment, what I would look to do, you could, let's say you wanted to be ultra simple on it, you could buy a 1 delta option and go super far in the money, but with volatility as high as it is right now, you're going to have to go pretty far in the money to do that, and you have to get a pretty unrealistic move for that to really benefit option or something like that. So initially, what I would think to do, let's say, for example, right now SPY, just based on the close today, it's at 261. If you were to buy the 252 call for SPY for May, 39 days till expiration, that's priced at roughly, let's just say $13.20. So by doing that, you're controlling roughly $26,000 worth of SPY for $1,300. Obviously, that's pretty nice. Of course, the disadvantage of that would be the time decay in there is going to come out to roughly $3, or I'm sorry, that'd probably be roughly $4. So how do you deal with that time decay? Well, what you could do is you could sell a 266 call against it. Now, by doing that, that means that you're actually then only going to be paying roughly $900. Break-even point is going to be right where the SPY is now at 261. You can participate from 261 to 266. Of course, assuming if you were to hold expiration, you would be able to control SPY for that amount for 39 days. Now, let's say that you're not looking to hold till expiration. By doing that trade that I just described, 30 deltas of SPY on your hands, meaning that if SPY were to move $1, you'd get 30 cents of the movement, approximately. So if you wanted to, let's say you did a three-lot on that, then you're controlling roughly the same amount of, you're controlling roughly 90 shares for $700. So that's roughly 10-to-1 leverage. So I would consider doing something like that. I'm not a fan of anything diagonal right now or horizontal right now, just because we're in a higher volatility environment. I'd recommend doing something shorter term and vertical if you are a shorter term trader.
There you go. Short-term vertical. Seemed like the St. Charles internet connection started racking up a third of the way through your thing there. But I think we got the gist of it, which was near-term verticals in SPY. Not too much of an outlay there either for your listeners. Mr. Rock Lobster, are you of a similar boat that or maybe you're a fan of the stock replacement, but you're not a fan of the covered call aspect of it, or are you pretty much poo-pooing both right now? You got another idea? What do you think here for our friend Mr. Davis?
Well, I think for Mr. Davis, if you think about stock replacement, you only need one call for 100 shares. So you could just take the rest of your cash and just put it in a CD, or one contract is going to give you, near 100 deltas. So you're saving a lot of money. So you just take that money and you put it away. It doesn't look like his time to hold is very long, right? So, you could just use call contracts. I think that's kind of what they're made for. That was the tailor use for a slightly in the money call. So I don't think his plan is that bad. I actually have a client that does. It's kind of the short-term or mid-term covered call writing, and they do it pretty well on in-the-money options. They have a good strategy going with it. So I think it's a totally reasonable thing to do. But I think normally I don't think you need to exercise the option. I think, if anything, you would just roll it if it's going well and you want to keep it. Why exercise it to take the stock unless you really want to try, some sort of dividend play? But you could have a synthetic dividend play by just writing writing a call against it that should be more than the dividend you might collect. So I don't think it's a bad play. I think it can be a very good play. And I get rid of stock all the time and buy calls instead and try to jack up the leverage a little bit especially when I'm trading in from a slight backspread position. Because I like keeping stock so I could trade it in the after hours. So one way to get around, those after hour problems is, if you have something, you have earnings or whatever, but you happen to have a position and then everything kind of blows up, you're like, woohoo, I can get out of my stock, and you can close in the after hours. So that is a way to do it. But with this, I think that's perfectly reasonable. I think an in-the-money call is a good thing to do for this. But you just keep all the rest of your money on the sideline, and you still should be able to generate yourself a pretty decent return. So I think it's a perfectly good use case for that kind of strategy.
No, I like having some of the shares. I was about to mock you for having the underlying, but that is the one use case I think is an interesting one, which is, of course, having some shares, something to sell in the after hours when you can't close out your options around earnings. Because we all know, we said it before on the show many times, how frustrating that could be when you're sitting on your hands in the after hours, especially during earnings season. Things are rocking and rolling, and you, as a devoted options trader, can do naught except if you have the capital in your account and the savvy, and your broker's savvy enough to give you margin for it, to do a little stock slinging against it. But that's few and far between these days. Speaking of stock, Mr. Rockoff kind of touched on it. The second part of this question is, should he be doing only buying enough contracts that he could afford if he were to exercise the options? Yeah, Andrew hit on it. You should have no intention of exercising these. As we said before, you're exercising, losing all that time value you're getting. You'd be much better off rolling or selling them out and then maybe doing something else, maybe looking at a different strike, different month, that sort of thing. That's a much better way to go than exercising. If your plan is to get the stock, then yeah, you probably should. But there's other ways to do that too. You could sell the puts, collect things, and do things. If you're selling the puts, yeah, you need to have the capital in there. If you want to do it cash secured, then you need to have enough cash in there. Maybe your broker, depending on your account, may even insist on having a little bit more cash in there in terms of what they require you there. But still, if you're going to do cash secured puts, you need to have enough cash to be able to buy the stock, or if you have to put it in when you get assigned those shares, you have to have enough time to put it in. We had someone write in on the show recently how they made a ton of money by floating on that amount of time they had to put the money in their account and then dumping out the shares. That was a rare exception. Don't let that guide you. But in general, if you're just doing the calls, no, you don't need to do that. And the one way to get around that is what Rob Lobster just alluded to. put some of that other money away for a rainy day. Collect some money market rates there, or perhaps you put all of it to work on the calls, and then you take advantage of the leverage aspect of options. But it's not quite the same thing as if you're selling puts and you need to have some cash in reserve. So interesting stuff. That was a long. We probably could spend more on that, but unfortunately, that's all the time we have. Sorry, listeners, that one question was kind of epic, so it took up a lot of time. But we like your epic questions. Keep hitting us up. We try to find room to squeeze you guys in with these epic treatises in every now and then whenever we have time. All right, let's keep on rolling to our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're keeping an eye on for the rest of this week. And, it does seem like our old friend Stormy, perhaps rearing her ugly head out there, her ugly figurative, at least for the market, out there, and some other things rearing their ugly heads towards the end of the day, too. We still finished the day up, but a lot of those gains haven't been given back towards the end of the day. So who knows? Perhaps we'll be in the red tomorrow after the old bell, or before the bell, or perhaps we'll have another rally ho day. We shall see. Does seem like the market wants to go north, but it keeps getting distracted, keeps getting its legs pulled out from under it by one scandal and one ratcheting up of tensions after another. That said, let's go back to the land of St. Charles. Let's see if the other guy on the party line out there in St. Charles is done with the internet, if we can have it back for a few minutes. Mr. Uncle Mike, sir, what do you keep an eye on for the rest of the week?
Everything micro and everything macro, of course. And looking at the one thing that we really didn't talk too much about today was these tariffs. So I think that if we do get some more news on the tariffs of where we're going with China and what we're looking to do, I think that'll be a big story again. But today it didn't really seem to be that big of a story. So a lot to be watching the rest of this week, along with earnings.
Yeah, earnings coming back, which is always a refreshing time of year. That said, Mr. Rocklops, I know you're focusing very hard on Miss Daniels, doing a lot of research into her back catalog, so you're prepared for all your mentoring sessions to have the answers at the ready. So I know you're focusing on that. Anything else catching your eye, sir?
Well, there's all kinds of numbers that have interest, all kinds of numbers. But anyway, we're really watching, to be honest. 2,700, can we see that even number again? I think the market wants to go up, but every single twist and turn related to just about anything, will push the VIX higher again. But yeah, we haven't mentioned tariffs because I think most of the weekend everybody tried to say, hey, we're just negotiating with the Chinese for tariffs. But obviously, they're doing it, I guess, differently than anybody's done before. Might work, it might not, who knows? But we'll see. And so we'll see really what happens. But ultimately, I think if we start seeing some solid earnings, that's what's really driven the market higher. And we probably will see slightly higher equity prices again if we do.
There you go, listeners. He's focusing on Stormy Daniels and all that other good stuff, his VIX red zones and all the other fun stuff that the Rock Lobster likes to talk about. Unfortunately, listeners, that music means we've come to the end of an epic sojourn through the world of options. A little bit of this, a little bit of that, a whole bunch of your questions, or at least question, singular this time, and a bunch of other stuff. Make sure you hit us up on the poll over there at Options. Make your voices heard like you've done many, many times before. Let us know what you're thinking. If you have a question you'd like to suggest for us, for our poll or question of the week, send it in. We always entertain listeners' suggestions. See what you guys have on your mind. Might be kind of fun. All right, and before we go, let's go back around the horn one last time, see what's cooking in all those other far-reaching corners of the planet, like St. Charles, where we are German Uncle Mike serve. I am just tired of all this madness. I want someone else to babysit my puts for me while I go to the beach. Who should I call?
Well, by all means, if you want to go to the beach, don't come to St. Charles. We don't have a beach here. But if you are interested in learning a little bit more about we are having my monthly option club tomorrow night at my office. Income Baby is going to be the topic of what we're going to be discussing. If you're interested in that or just working together in general, even if you're not in the St. Charles area, give me a call at 312-212-3531 or send me an email at mtosaw@rcmfs.com. And we, as always, have the offer on the table to where if you do become a new client, we will give you a $100 gift card to spend in any way you would like with our friends over at the Option Pit.
Income babies, that's the topic. Spoiler alert, sir. I'll give the answer right now. Babies are the death of income. There is no income once you have babies. All income goes away once you have children. You want to be wealthy, do not have children. And then you're good to go. All right, Mr. Rock Lobster, take us home, sir. If I don't have any children, I am hoarding wealth, and I want to put it to excellent use. Who should I talk to? What should I learn about?
Come out my Vol newsletter. Vol newsletter is doing well. It's the easiest way, most inexpensive way to learn how to trade volatility. You'll learn to trade it like a champ. Almost daily updates, trades all week long about actually how to position for volatility. Probably unlike anything that's out there on the market. Actually, I'm quite sure there is because that's why I created it. So if you want to learn how to trade volatility the right way, just sit back and learn and see what's going on. Subscribe to my Vols newsletter, pop over to theoptionpit.com. Yes, kids are kind of like boats. But they're walking money pits, not floating money pits.
Yes, they walk, talk, poop, all that fun stuff, and they just eat your money. So if you don't want to have income babies, don't go to Uncle Mike's show. Otherwise, you probably should go. I think it would be fun. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, subscribing, all the other fun stuff that you guys do. We appreciate it all. We'll see you back here on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.